tax freight train is bearing down on your retirement. To protect yourself, you'll have to harness the power of zero.
Hello, folks. This is David McKnight. Welcome to the Power of Zero show. Grateful that you're with us for another consecutive week. I am the best-selling author of The Power of Zero, Look Before You LERP, The Volatility Shield, and coming November 17th, Tax-Free Income for Life through Penguin Random House. Of course, you don't have to wait until November 17th to pre-order. You can pre-order right away, and if you do, you can take that receipt number, go over to davidmcknight.com, input that receipt number where it says claim my free chapter, and you will get free chapter 1. So you can find out the basic premise of the book right now if you head over to Amazon and pre-order the copy. By the way, it's currently, I believe, at $19. They have a guarantee that says that if you purchase it at the higher price and they lower it between now and when they launch the book on November 17th, they will refund to your credit card the difference. So there's no reason to wait if you think that's going to save you money. All right, if you are looking for someone to help you navigate all of the barriers and pitfalls that stand between you and the 0% tax bracket, please head over to davidmcknight.com, hit work with David, and we will hook you up with someone who is vetted, trained, qualified within my network that can help you shepherd you through the process to get you the 0% tax bracket. And if you are a financial advisor who says, hey, enough is enough, I want to figure out how to do this for my clients, head over to powerofzero.com, and we're happy to talk with you about it. All right, today I want to continue a discussion that I started a couple of weeks ago in a podcast entitled, Is Joe Biden Coming for Your 401k? And the answer is yes, and let me add that it's even worse than I initially portrayed it. So what we're going to do is we're going to go through some of the math today of the implications of Joe Biden's proposal. And let me just read right off of Joe Biden's proposal from his website. Under the section Equalizing the Tax Benefits of Retirement Plans, he says current tax benefits for retirement savings provide upper income families with a significant tax break. While providing a limited benefit for low and middle income workers, Biden will equalize benefits across the income scale, so working families also receive substantial tax benefits when they put money away for retirement. Okay, so just to give you an example, if someone in the 39.6% tax bracket, which is going to be the new highest marginal tax bracket when if Joe Biden gets elected. So if somebody contributes $10,000 to a 401k, they're going to experience $3,960 of tax savings, okay? Whereas someone in the 10% tax bracket contributes $10,000, they're only experiencing $1,000 of tax savings. So this proposal is designed to equalize the tax benefits regardless of how much money you make. So experts have looked at this and they said in order for this to be tax neutral or revenue neutral, that tax rate, the rate at which you would receive a tax credit would have to be 26%, meaning that for anyone that makes less than 26% or anybody in a tax bracket less than 26%, this is going to be a really good deal for you. And anybody above a 26% tax bracket, this is going to be a really bad deal for you. You're probably not going to ever want to contribute to a 401k again. And I'm going to explain why the math is even worse than what I explained in my prior podcast. And by the way, I'm going to be drawing fairly heavily off of an article by Jeff Levine, who is, in my mind, one of the smartest minds in the tax space these days. And he does a great job in his article. I will include this article in the show notes so that you can see it. But he does a great job of laying out the unintended consequences of this tax plan. So let's dig right into it. Let's say that you are in a 39.6% tax bracket, which is a tax bracket that would be a reality under Joe Biden, and you want to contribute $20,000 to your traditional 401k. in doing so, you would receive, and let's just run with this 26% tax credit number. It's not necessarily going to be the number, but is a it's a revenue neutral number. And let's assume that that's the number that Joe Biden follows through with. So you would get a $5,200 income tax credit. So you're in a 39.6% tax bracket. You contribute $20,000 to your 401k, multiply $20,000 by 26%. That gives you a $5,200 income tax credit. And while that sounds amazing, you got to remember that $20,000 of earnings, you're not going to receive a deduction for that. Okay. It's going to still be included in your income. Therefore, you would have a gross income tax liability attributable to the $20,000 of $20,000 times 39.6. In other words, you're going to, because of that $20,000, because of Biden's proposal, you're still going to have to pay $7,920 of tax. However, that $7,920 of tax will be offset by that $5,200 retirement tax credit, which means that whereas formerly you were getting a $7,920 income tax savings, you are now going to have to pay $2,720 of income tax on that $20,000 401k contribution. Okay. So that nets out to be a 13.6% tax rate on the income that in the year that you contributed that money to the 401k. So that's 39.6 minus the 26%. That's 13.6%. Income tax on that contribution. However, there's more, okay? We're just getting started here. At some point, you're going to have to take those dollars out, right? Because they haven't been taxed yet at the federal or state level. So not only did you pay 13.6% to put the money in, but let's assume you're still in the 39.6% tax bracket when you take the money out. Now you're going to have to pay 39.6 plus 13.6 for a total of 53.2%. So that puts you above 50%. That's not very fun, but it gets worse, unfortunately, because we haven't considered the state tax implications of this. Okay. So Jeff says, since the contribution would no longer be deducted from income on the federal return when contributed to the 401k, and the reason for that, by the way, is because it generates a separate tax credit on another line of the tax return instead. In other words, the math that's taking place on the tax return happens in a completely different way. Okay. So let me repeat that. Since the contribution would no longer be deducted from income on the federal return when contributed to the 401k, listen closely, the contribution would still be included in the adjusted gross income calculation that carries onto your state tax return. So that typically will carry down to the state level as well, which means that unless state legislatures do something about this, they create, some sort of a basis here. Unless state legislatures act on this, your retirement plan contribution may end up being fully taxable at the state level when contributed. So let's say that you are, you're at a state that charges you 5% tax because you're no longer getting the contribution, the deduction at the state level. You're going to have to pay 5% more. So that's 39.6 plus 5 plus 13.6 for a total of 58.2. However, we're not done here, okay? Because the retirement account itself is still pre-tax. The balance might be fully taxed at the state level upon distribution, okay? So you're going to have to pay federal tax, and you're going to have to pay state tax upon distribution as well, okay? And even if they gave you a basis that you had to keep track of, that's not going to be very fun, as Jeff points out. So that's not going to be fun to keep track of. So what's the solution here, folks? The solution is pretty easy, I think. The solution is if Joe Biden comes out with this 26% threshold and you find yourself in a tax bracket that's above 26%, the solution here is pretty easy. You contribute money to your tax-free bucket instead. You contribute money to your Roth 401k. You don't contribute money to your 401k, you simply contribute money to your Roth 401k. All of this scary math, all of this compounding of taxes, all of this double taxation, double, triple, quadruple taxation that are the inevitable unintended consequence of this proposed legislation, all of that goes away if you simply decide to pay tax at your tax rate today. If it's above 26%, pay tax at your tax rate today, and you can avoid all of this extra taxation that you're going to experience along the way at the outset, but also on the back end. Okay, so there's extra tax at the beginning, extra tax at the end. This is not going to be very fun for you. You're not going to be able to keep very much of your hard-earned retirement savings if you're above that 26% threshold and you contribute money to your 401k. So yes, this has the ability to radically redefine the retirement landscape, which is obviously the message of my prior podcast. But what I failed to do in my prior podcast is to fully articulate exactly how severe the unintended consequences are of this type of proposal. So not a very long podcast today. I just wanted to help you understand a little bit better the math of Joe Biden's proposal when it comes to your 401k and other qualified retirement plans. Now, is Joe Biden going to get elected? Who knows? It certainly looks that way, but like I've said in prior podcasts, it looked that way in 2016 that Trump would lose as well. So I try to stay as apolitical as possible, but it's looking like Joe Biden is starting to have leads in all of the states that matter. But let's see what happens in Election Day. I would not surprise me if Trump squeaked this out, in which case everything that I've told you today becomes an entirely moot point. So that is the podcast for today. Once again, would love it if you bought a copy of my book, Tax-Free Income for Life. You can do that at Amazon or pretty much any book retailer. You can buy it really at any online bookstore. And again, if you're looking for someone to help you navigate all of these details and get to the 0% tax bracket, head over to davidmcknight.com. If you're an advisor and want to be part of our group, head over to powerzero.com. Would love for you to subscribe to the podcast wherever you listen to podcasts, and also would love a review on Amazon for any of our books, as well as our movie, Tax-Free Income for Life. If you are an advisor and want to, our movie, Power of Zero, the Tax Haven, is coming. And if you want to watch that movie for free, if you're an advisor, head over to thetaxtrain.com. Thanks for being with us, folks. As always, I do not take it for granted 1 ounce. I'm really appreciative of your listening to this podcast, and we will look forward to chatting with you same time next week.